Greetings, everyone. It's a real delight to be here and to talk about the powerful role of data in achieving gender equality. Now, I know that this is something that is new to the CAS and probably new to many of you, and we're really looking forward to talking you through how gender equality can be important, or how actuaries can have an important role in gender equality. And so thank you all for joining us. I'm Michael McCord, and I'll be the moderator and the facilitator for this session today. And my job is to try to make this as interesting and informative as possible for you. And so before I get started, I want to start out with a couple of informational features on the system. First one is that at any time, you can adjust your audio using your computer volume settings, whatever you might have. I would say to start it loud because you're going to want to hear every word that these folks say. Okay, so keep it loud. And then on the right-hand side of your screen, I just learned this myself a few minutes ago, really. On the right-hand side of your screen, you'll see the text chat window. There's a large window which holds all of your sent messages and a smaller text box at the bottom where you can type in your questions. To send a question, just write it in that little box, click on the text box, and then click on send, the send button. All questions that you submit are only seen by today's presenters. So you can say whatever you want, everybody else won't see it. And then your questions will be responded to in the order in which they are received and will be addressed at the end of the presentation. The only caveat there is that I get to choose if we want to answer those questions. So make them good. Really, we are hoping to have a real interaction here. I know it's hard on these different web platforms, but I think this is a really important topic. And I think that there's going to be a lot of questions that certainly could be asked. So we'll all be disappointed at the end if there aren't very many questions. So we're looking forward to your questions and your probing. Push us, really. Don't let us get away with things you don't understand and such. So at the conclusion of the program today, we'll ask you to complete a brief post-event survey. And so we all know what you're supposed to say on those, so I won't go into that anymore. But do please take a moment to do the survey because it helps CAS in assessing what kinds of programs they should have and such. And so I want to talk about what we're going to talk about here. Let me start by looking at the Sustainable Development Goals. Now, I hope that all of you know of the Sustainable Development Goals. One of them that we're going to talk about today is gender equality, number 5. What we're aiming at is to try to help you all to understand what is the role of the actuary in bringing about gender equality. And I think, you know, it's easy for us to say, okay, if we're going to talk about gender equality and we're going to talk about women, then okay, you know, women need they need maternity benefits. That's not what we're talking about. Not at all what we're talking about. Yes, they need maternity benefits, of course, but that's not what we're here to talk about. Really, we want to talk about kind of the nuances and the depth of what kinds of products are necessary for low-income people and how we can use actuarial skills in such a way that we can contribute very significantly to those efforts. Okay, if we can quantify things, then we can do things with it. We can prove points, we can make arguments if we can quantify them, and I dare say qualify them also. So we're going to look at quantifying data, and we're going to look at qualitative data also, and the importance of qualitative data. So you're going to get both pieces today. And so I think it's important that we recognize this as one of the Sustainable Development Goals. I would argue that we can't have sustainable development if we don't have good insurance products, and we can't have good insurance products if we don't have actuaries who know how to approach some of these areas. So we'll talk about these The Sustainable Development Goals are actually rather sophisticated. There were the Millennium Development Goals before that, and they were pretty straightforward. And now the Sustainable Development Goals, they've got 9 targets just for gender equality. There's 14 indicators. So this is really set up in a way that we should be very clear about how things move forward and how we can do things. And then just this last one, we're going to talk about sex disaggregated data and the importance for sex disaggregated data. You can't do actuarial work unless you've got, or you can't do actuarial work on sex issues, gender-based issues, if you don't have data from institutions. And so this is an effort that we're really all working very strongly at trying to gather. We do work with distributors and with banks and with others. And one of the things that we did a couple of years ago is we worked with an organization looking at why gender-focused insurance products were good for women. And I mean, we started out even before that with, are they good for women? And what would be the business case for the institutions? And what we were able to do was to take the key performance indicators, because we got the institutions to disaggregate the sex data, we could say what's happening with people who have specific gender-based insurance products. And what we found was actually tremendous benefits, right? And we saw that people stay longer with the banks. So they're borrowing more, they're saving more. They saved almost twice as much. They stayed another 3 years in these lending programs that were there out of, well, 12 was the number of years that they stayed. They bought more products from the distributor. This was amazing to me because although I'm quantitative myself a bit, we could see very clearly what those benefits were, and then we could make those arguments. And what we're doing here is we're talking about this in a much bigger way. How can we quantify, qualify things, information, data that can help us to make these changes? And so, so I want to talk about our speakers. And we're hoping that when you leave here, you will have an excellent understanding of why actuaries are important in understanding gender-specific products, why gender is important in focusing on how do we develop products that are for the women's market. And we've got 3 speakers here who are really fantastic speakers, and they're all part of 2 projects that we're working on right now. One of them looking at gender features, what are the, or gender insurance factors. And so what are we looking at in terms of what are the things, the issues that women come across, the risks that they face, and again, beyond just the top layer, what are the risks that they face, how are they facing them, and then how can we develop insurance products with them? And so the key component now that we need is how do we get actuaries to help us to be able to price these products, to be able to understand these markets. And so Prapti has been working with us. She works with, as a team member of the IFC's Women's Insurance Program. And this is a really important program. They've done some great work around the world, Cameroon, Ghana, Nigeria, Philippines, Sri Lanka, just to name a few. And they were also behind the Shifa Shield document, which I hope many of you have seen and read, because this was a really seminal piece on how we need to start looking at women in a different way in terms of risks. The risks of women are different than the risks of men. We need to recognize that, and I think there's documentation all over that proves that point. How do we take that information and turn that into products? And so Prapti's been working on that. One of the interesting things from the Shifa Shield document is that there is a $1.7 trillion, trillion with a T, $1 trillion opportunity for insurers looking at the women's market as we move forward. And if there's a $1.7 trillion market there, we need actuaries to help us figure that out and how we can make that work. We're also going to talk to Josh Dobiak, who works with Milliman and is a colleague of mine at Milliman. and he specializes in asset and liability management and modeling of complex risks. And he's actually looking at gender-based violence. How can we take a look at gender-based violence and quantify that in a way that we can use that with governments and commercial entities and others to get them to make decisions in a way that might lead to changes in the way these entities deal with gender-based violence. And I think this is really, really important. As far as I know, it's not been done before. We're working on this, and Josh is really doing a great job making this happen. He works in balancing economic, regulatory, and accounting issues in the US and internationally. He's worked in a number of places, including, of course, the US, Europe, Japan, Hong Kong, Singapore, and he's done a great deal of work there. He's an academic too, and he's conducted research on political risk, economic development, and insurance with a focus on quantifying country-specific legal, economic, and political structures and roles. And he's writing a dissertation. His dissertation research is focused on the complex interactions between social, economic, and legal forces in contributing to political risk and other barriers to economic development. And so for me, Josh is the perfect person to be looking at these gender-based violence issues and thinking about how can they get integrated once quantified, how can they get integrated into these other mechanisms and these other parties. And we also have Barbara Cheshire Chabaga from Kenya, who is a founder of AB Consultants, and just a really fantastic person doing great work focusing on microinsurance in East Africa and elsewhere. She's done some super things. She is an actuary also, and a member of the Kenya Actuarial Association. Sorry, and she's done a number of other things too. And she's really a trailblazer, which is one of the things that I really like about the work that she does. She has designed the first human-wildlife conflict insurance in Kenya to try to create the incentives for people to do right in terms of wildlife and such. And I think this is really important in linking, again, the insurance and behaviors of people. So I think that's really important. And she's also developed an insurance game, Resilient Me. We say that in insurance, people have to understand what products they're buying, and we have to understand them and their needs and their risks. And Resilient Me is a tool to help do that. So really quite an innovator. She's also volunteered with the Casualty Actuarial Society in other things, and she's currently working with the International Actuarial Association on their microinsurance task force. And she serves on the boards of Britam General Insurance in Kenya and Hornbill Development Company. So really three excellent speakers here that have really actively been digging into these issues to now be able to share their information with you. So we're going to start with Prapti to talk about the need for gender disaggregation and what you can do with that. And so Prapti, I'll pass this on to you if that's okay, and if I can remember how to do it.
Thanks, Michael.
Go. Yeah. Okay. Here you go, Prapti.
All right. So I think I got my screen. Yeah.
Yes.
Can you see my screen, Michael?
Yes, I can.
Thanks. Thanks, Michael. Thanks for the introduction. Good morning, everyone. It's my pleasure to be part of this conversation today, and then especially to be talking about the importance of sex disaggregated data in supporting women's financial inclusion. What we have seen, I think what we have seen at IFC is that due to women's improving socioeconomic status, women represent an opportunity for the insurance industry. Michael earlier talked a little bit about the Shifa Shield report that we had published in 2015. But what we've also realized is that because of the lack of awareness and understanding of this potential, right now we have seen in the last few years that there's a lack of interest in targeting women as a customer segment by insurance industry as well. And as a result, we've also seen that sex disaggregating the insurer's portfolio, and by insurers, we are talking about traditional insurers, right? And it would be basically insurers who are targeting women at all, men and women at all segments of the income. So in a way, it's starting to become a chicken or an egg issue on sex disaggregated data. So for my part today, what I will do is I will be sharing our experience with sex disaggregated data. And because you work in the actuarial field and with insurers, we hope that this resonates with you. And I'll also be sharing the importance of understanding the importance of the data for understanding the behaviors of women and also for building solutions for women. And if there is time, of course, then I will also try to focus on some of the challenges and lessons from our experience that we have seen so far on sex disaggregated data specifically. But I think before we dive in, I know that we are all very much focused on what we are on our work. So what I wanted to do is to basically set the stage. I wanted to actually step back and talk a little bit about the global women's insurance opportunity that and Michael mentioned, and also give you a little bit of a background on why we think there is a business case around targeting women as a specific customer segment. And then I will segue into more detailed discussion on the sex disaggregated data. So in 2015, as Michael said, we launched the report, Shifa Shield, and the goal for us was to basically to understand the relationship between insurance and women. We wanted to see if women were buying insurance, if insurers were targeting women as a segment, right? And this was a study, as of course Michael mentioned, that one of the first time such a study was being done globally in such a big scale. The report, basically, the goal of the report, I'm going to go back. So what the report did is it looked at 10 countries across the emerging markets, and with the goal of building the business case around targeting women as insurance customers as well as distribution force. And among the 10 markets, there were 3 that was focused on the Asia and Pacific area. They were Thailand, Indonesia, and China. So what the research highlighted was that globally, insurers had not started targeting women as a customer segment. And when we talked to insurers, we also found out that insurers did not really know their portfolio and gender composition of their policyholders. And when you don't know who your customers are, then we realize that you're also not able to target them very well, right? And then we also talked to women, and then women said that they did not really trust insurance. They did not really also understand insurance and how it could actually add value to their lives. We also realized when we were doing the research that at that point, insurers were selling very much gender neutral products, which didn't speak to the risks that women face in their lives. And because at that point, I mean, a lot of the time, products are very much created with the male customers in mind, because for a very long time, it was men who were the primary breadwinners and made financial decisions at home, right? And while times had changed, insurance operations was still lagging in that front. So as we already know, the report highlighted that there's a 1.7 trillion market opportunity that's up for grabs. And then out of this, 50% of this opportunity is supposed to come from emerging markets, right? The report, so what are the drivers of these growth? So we found that there are basically 2 drivers of growth. One is that there are more and more women participating in the economy. More women are educated and they are working more, they are earning more income, as well as they're engaging in entrepreneurial activities as well. The second driver for growth is basically that women, their roles were evolving at home and at work, and for that reason, they needed more protection. For example, there are more higher divorce rates at this point, delayed marriages, more single-headed households that are headed by women. Women also have longer life expectancy, and we also know that there's also gender pay gap, right? Because of various reasons, and one of them is because of their caregiving responsibility, which means that they are juggling work as well as home, and which gives them, you know, the opportunity to earn more income. It becomes reduced as well as they proceed with their career. The other reason is also women and children. Women are always worried about their children's and families' health, so they also want to make sure that they are protected. So other than the key drivers for growth, the report also looked at why women are a valuable client for insurance sector. And what we found was that women have a huge appetite for protection. And by that, what we mean is that women basically aren't just looking to purchase insurance for themselves, they also want to purchase insurance for their family. And because they are the conduit to the family, they also help capture the family wallet, right? They're very focused on prevention. So because again, a lot of the time, it's more about women's dual role at home and at work. And here, they're very much focused on prevention because at home, they are the CFOs and caretaker of everyone's health. And so because of that, they are focused on prevention, and they're looking for peace of mind. We also realize that women are good advocates for services as well as very loyal. They can be great brand ambassadors, and if they like your services, I know Michael also mentioned that earlier, they are more likely, because of their loyalty, they are more likely to stay on with the company. And then also they are likely to give referrals to other friends and family members as well. And we've seen this with our research in Ghana and Sri Lanka as well, where there's a huge word of mouth culture, where if it's likely that if your service is not good enough, other people are also going to hear about it through women. We also know that through academic studies, women are less prone to fraud claims than men, which is a major issue for insurers. And nowadays, they are becoming more and more digitally savvy. So there is a need for insurers to reach to women through digital channels as well. So in addition to building this business case, what the research also did is the research provided strategies for targeting the woman's potential for insurance. And the report highlighted is first and foremost, the first important factor is the importance of sex disaggregated data to build intelligence on women. So we have all heard that you can't improve what you don't measure. So in order for you to understand your portfolio, what you need to do is you need to start by sex disaggregating. Sorry, it's a mouthful. And then you also need to continue analyzing that portfolio as well as collecting new data, right? The second and the third strategy, I'm not going to focus too much on it for this discussion because our focus is on sex disaggregated data. However, what the strategies say is that there is a need for insurers to conduct in-depth study to understand women and their risk profile. And this is what Barbara is going to be talking about in her presentation. And the third is if insurers want to target women, then they need to move away from the traditional distribution channels and then go where the women are, right? So So after 2015, what we did is using the insights from this report, we've been working with insurance companies to help them target women as customers and distribution force. So what we do as part of this project is we partner with insurers for a minimum of 2 years. And during this time, we work closely with them to help create their go-to-market strategy from their women's insurance program, as well as launch women-centric solutions. So I think now I want to go to the most important aspect of this discussion. So why is sex disaggregated data so important? From our work with insurers, we have found that in most of the cases, before IFC's interventions, the insurers were not actively and diligently analyzing their portfolio by sex, right? And so our intervention and our help, our client has found this support tremendously insightful. And the reason being that, for one, it provides a meaningful picture of how an insurer is currently serving the women's segment, and it also helps to understand where the gaps are. So what we do with our clients, we ask our clients to provide their sex disaggregated data portfolio. We share with them an Excel with tables and instructions on the data that is needed. And the kind of information that we ask for is the policy holder count, the customer clients, the GWP revenue, sum insured for the customers by sex. We also ask for disaggregated data that's product specific as well as demographic specific. So then when the insurers share back the data, what we realize is at a glance, it actually tells us the state of the ability of the insurer to disaggregate, right? How deep they can go and where the gaps are. We also then crunch the numbers to better understand the behaviors of women in their current portfolio. And what that does, it allows us to then look at where the low-hanging fruits are and which are the products that are currently maybe popular among which demographic or which segment, and what needs to be tailored in order to reach women better. So recently I was working for one of our clients and analyzing their portfolio, and what we realized was that the premium spent for women is almost on par with men on most cases. And this, I think, brings me to the other important point, that this data, by looking at this data, also builds the business case for the insurers that women should not be ignored as a customer segment. And then what this ability to quantify does is that it helps to understand where the current portfolio is, and then it helps to build a baseline and continue also monitoring the growth and profitability and sustainability of the segment. So what I'm trying to say is that, I guess in a way, this is about incentivizing the insurers, right? The more value the insurers see in targeting women, the more they're likely to build products that are catering to them, which means that the more, when they do that, insurers are helping women protect themselves and their family, and in return helping women become more and more financially included. So I think the other question that's likely to come up is that sometimes insurers, we also realize that the data is not always complete, or insurers may not always be totally confident about the data that they have, right? So for IFC, at IFC, sex disaggregated aggregated data is just one aspect of gathering more information about the behavior of women. What we recommend our insurers to do is we recommend them to continue building robust and accurate data. And to do that, we look at the internal view as well as the external view. An internal view is what I talked about earlier, looking at the sex disaggregated data, analyzing and collecting them, building baseline. Whereas externally, we also look at what kind of data is available out in the market, right? Through Findex, through financial access surveys, World Bank portal, we look at that. We also recommend insurers to conduct market research exercises on the women's segment. to understand their risks and their needs. And what this market research also does, it kind of also helps affirm some of the findings from the quantitative data that's already within the portfolio, but also gather new data and information. So in addition to this, we also conduct the market opportunity exercise, which we did for Shifa Shield, but we then tailor it to the local market. And this also helps to build a business case around the opportunity and how to tie in the clients, basically the opportunity and opportunity target the market as they move on with their program or with their product creation. So I think here I wanted to give you an example, but Michael, how are we with time? I have two slides.
I'm fascinated with what you're saying, but if you could have a few more minutes, if you could.
Sure. Sure, thank you. So basically, just wanted to very quickly showcase an example with a non-life insurer that we worked with between 2018 and 2021. So we worked with a Ghanaian insurer, Activa Ghana. And so when we did the market research, we saw that in general, women business owners in Ghana did not really know that a product like business insurance existed and they could use it to protect their businesses, right? So through our intervention, what Activa Ghana did is they developed bundled business protection products, solutions for women business owners. And what the products do is, in addition to the business protect, it also includes stipend for spousal loss, maternity leave, and also allows these entrepreneurs to opt into health cards in Ghana. And what we have seen is since the beginning of the program, AIG has seen over 300% increase in their policyholders, including women business owners in 2020 compared to 2017 baseline. Do we have time to go into the challenges, or maybe we stop here and I believe we will get into this conversation at some point or the other, Michael.
Okay, that's fine, Prapti, this is fascinating to me because what we have is the IFC with the international backing and international power working with these insurers along the process of proper product development. One of the things that I've seen over the years, and I hope that all our actuaries will chuckle, but the problem that I've had, the biggest issue I've had is typically the actuaries, right? I can get the CEO to think, oh yeah, we should do these things. But when it comes down to the actuary is often too conservative, shall we say? Maybe rigid even sometimes. How do you get those actuaries to really see the importance of this?
Thanks, Michael. That's a good question. I think for us, this whole project, right, working with any of the clients in the market is an act of behavior change. So the minute we go in, because before working with IFC, what we've seen is most of these clients have not even thought about women as a segment. So at every step of the way, it's a matter of trying to change the mindset and change the belief. So I guess the way we start is by teaching them about showcasing the business case. And then when we have our one-on-one interviews and the processes, that's when we also talk to them further about the importance of women and the business case opportunity again. And I think the main work that comes in is after when we do the data disaggregation and when we are doing our presentation of our analysis to the client, and when we are building products, what we do is we bring all the team members of the insurance companies together, along with actuaries and the other units, the marketing, product development team. Everybody comes in together, and we work together to build the solutions together. So this is how I would say this is one way of addressing the issues where we see the pushback from the clients, because we've had challenges, right, in the past where in the room we've had clients, the actuaries pushing back and not really convinced about the need for specific women's insurance products, but along the process and working through the using human-centered design and working through the product development process where they are part of the conversation from the very beginning helps to bring them in as partners along the process.
Yeah, and that partnership building with the actuaries as well as everybody else is really, I suspect, critically important to the work that you do. And certainly the disaggregation is the number one step. For me, that's kind of the foundation. If you don't disaggregate the data, how can you build sex-specific products? So I think that's really important. And an example like this, a 330% increase, like Activa in women clients, those are basically new policyholders that they didn't have before. So that's super progress and super results. So excellent, Prapti, and I'm sure we'll come back to more of this as we go. But now we'll switch over to Josh, who's going to talk about gender-based violence and the issues of the horrors of gender-based violence and how actuaries and the rest of us can do things to really improve the situation for people across the globe in terms of gender-based violence. And so, Josh, please go ahead.
Yeah. Can you see my screen all right?
Yes.
Okay, excellent. Well, good morning to everyone that's in East Asia, and good evening to anyone in North America. I am Josh Dobiak, as I was introduced. I will be talking about the economic consequences of gender-based violence. A lot of this is stemming from a project, as Michael had mentioned at the beginning of this webinar, that we are working on, that is looking at how to incorporate gender-based violence into traditional pricing, or the pricing of products like political risk insurance, but also to include it as part of an investment strategy construction process. The idea here is the realization that gender-based violence is deeply impactful, not only in the lives of those that experience gender-based violence and those that are surround those people, but also it has profound economic consequences for countries in aggregate. Increasing evidence has demonstrated that countries that have poor measures of gender-based violence tend to be more politically volatile, tend to experience reduced economic growth, greater frequency of economic dislocation, also a much more variable economy, all of which have repercussions that extend far beyond just the profound consequences of the gender-based violence itself. Now, that being the case, one of the challenges that we confront is what to do. Sorry, I'm trying to get my screen to advance, and it doesn't seem to be cooperating with me. Sorry, apologies, everyone. Technical difficulties. All right, I can get this. Okay. Not sure why this isn't working. Apologies, Michael. I have some technical difficulties. I'm not sure if
okay.
you
go back to the the non-presentation view and just make that as
Yeah.
big as you can. And that might be easier to control.
All right, does this look all right for everyone?
Yeah, that's okay.
Okay. Yeah.
Better.
All right, excellent. All right, make sure that works. Okay, so one of the challenges that we have with gender-based violence is how to operationalize what we mean by it. And part of these obstacles are more than just simply the definition of gender-based violence, but also how it's measured across different regions and at different points in time. Usually, there is not a consistent annual collection of measures of gender-based violence in all the countries that we would be concerned about. And so you end up having national or international investigations that use slightly different definitions than we, slightly different definitions across those regions. And as a consequence, it's not always an apples to apples comparison. And so some of the areas that we see the biggest kind of umbrella or components of gender-based violence, as we work to build sort of an umbrella concept or scoring of this, are factors that I have listed here. Again, the many faces of gender-based violence. It's not just something like intimate partner violence, so that is a dominant feature of gender-based violence. But you also have discriminatory family laws, which can result in disparate treatment of men versus women as members of a family, also sons versus daughters. And as a consequence, it can give rise to a belief in greater acceptability of certain types of acts of violence. We also have variables that are not directly a measure of gender-based violence, but show strong associations with the prevalence of gender-based violence. And so we see that in child marriage. Countries that have a high level of child marriage are more likely to also have a higher incidence of gender-based violence. If there's a societal approval of violence against women, then it's not considered as negative when it happens, and so it's more sanctionable, or it's more acceptable in that area, and so you generally see a higher prevalence. Female genital mutilation is also associated with gender-based violence, and an act of violence in and of itself. There are also barriers to reporting and prosecuting assaults. So even if you do have laws against things like marital rape, sexual assault, there may be a strong pressure not to actually report those crimes, or if you report those crimes, there may still be a lot of friction or a lot of challenge that confronts people to actually get prosecutions, to prosecute it. There are also laws against, and then there's the question of laws against sexual assault, marital rape, all those other things. In some countries, they're not outlawed at all, or they're only considered the equivalent of a small crime or a misdemeanor, and the severity with which a country punishes people who engage in acts of gender-based violence also has an association with the frequency of gender-based violence. Now, how does this come together from an actuarial perspective? So the project that we have going on with USAID's Invest initiative is drawing a connection that we already see between gender-based violence and economics, and focus on how to incorporate that in assessing investment risk. So the project's theory of change is that political risk insurance promotes greater awareness of gender-based violence issues by assessing specific risks which drive differential pricing. Countries that have a higher risk of gender-based violence will tend to have a higher cost of investment or lack thereof. And as a consequence, there is an economic incentive for government and private sector participants to prevent or mitigate gender-based violence. And so by looking at gender-based violence and its role in investment risk, and making explicit the contribution of gender-based violence to economic outcomes, this will allow institutional investors to analyze better the risk posed by investments which contribute negatively to these metrics. And as part of a more comprehensive ESG-aware investment mandate, if I hear ESG means environmental, social, and governance aware, then this can incentivize asset selection, which allocates or reallocates away from socially less desirable assets. And so for many of you, you may not be that experienced with something like political risk insurance. It is a less common coverage, but it is a type of insurance that is meant to protect businesses that are starting or maintaining ventures in countries that are perceived to have a higher amount of political risk, to insure them against specific types of political risk. So, it could be something like social unrest, protests. It could be civil war. It could be, contested elections that result in riots and other things like that. You have these different features, but the foundational aspect of all of this type of political risk is that it impairs a business ability to continue as a going concern. And so the idea with political risk insurance is that you purchase the policy, and if a triggering event occurs, then in exchange for essentially giving or transferring your business to the insurance company, you get paid the face value of the policy. By incorporating gender-based violence, what you do is that you're augmenting the traditional measures used to price political risk insurance to reflect the additional characteristic of tolerance or acceptability and prevalence of gender-based violence, with the understanding that countries that have higher frequency, again, are more likely to be politically unstable. So the political risk insurer pricing model looks at pretty much these 5 kind of major classifications for political risk. So expropriation, this is where the government seizes businesses or nationalizes businesses. Political violence, this is where you have acts of violence in furtherance of a political aim. That can also involve acts of terrorism or war. Sovereign debt default is another classic one, where the government is no longer able to make good on payments on their debt. And this makes operating in that country challenging, because sovereign debt default tends to create currency volatility and a lot of other issues that make it very difficult to continue to operate a business. And then capital transfer barriers. These are barriers that restrict the transferring of cash or assets either into or out of a particular country. And the way that this generally is priced is that political risk insurers will look at sovereign debt ratings, other risk measures that are provided by rating agencies like Moody's, S&P, and Fitch. As a concept, they'll use that baseline score to measure the general baseline risk of a country, and then they will use underwriting variables to tweak that value up or down based off of concerns that will be related to the business seeking the insurance, where they're going to be doing business, and other forecasting kind of measures that they think, if they think that the political environment is likely to change for the better or the worse, then they may also alter the premium charged. By incorporating gender-based violence measures into these country ratings, this will allow actually an enhancement of the existing political risk insurance pricing model to use another measure that is highly associated with things like sovereign debt rating, but not perfectly correlated, and does convey additional information about the economic risks that any business is going to face. And so our goal is to take these existing models, these existing framework for pricing political risk insurance, augment them, and then provide a more comprehensive model for political risk insurance that incorporates gender-based violence, with the goal of hopefully incentivizing governments to implement policies to help curb gender-based violence, and also businesses that are looking to expand or start operations in regions that have low gender-based violence scores to have policies in place so that hopefully they don't exacerbate the existing gender-based violence risk. Related to this is the business case for gender-based violence aware investing. So this is taking an even broader perspective and looking at the trend towards ESG aware investing, where you incorporate social measures as part of your economic modeling of investment portfolios. So when you're doing optimization, you factor these additional non-traditional economic factors into your optimization to move yourself so that you investments that have a higher risk of increasing gender-based violence, or if companies don't have policies to sort of help reduce the negative consequences of their business operations, they may get a lower score and therefore be considered a higher risk and a lower, so therefore the risk-adjusted returns are going to be lower, and you're going to allocate less funds to that, versus organizations that are operating in countries that are taking a proactive attitude towards gender-based violence, and they have governance policies in place as well as a business to mitigate negative consequences of their operations in a region, then they may get more investment. The lack of tools to, the current situation is that there are a lack of tools to assess impact of investment in gender-based violence. There's only been a couple organizations that have looked into that. But research by the World Bank has noted that when the bank had supported construction of a new road in a country, for example, it received reports that the influx of construction men hired to build the road was sometimes correlated with increased reports of sexual violence against women. And so this is the sort of operational governance concern that can pop up and is an unintended consequence of any sort of investment. And these are the sort of risks that you can sort of assess and hope that businesses will have a plan for when they look to expand into new regions. Go to the and I know that we're running out of time, so I'm going to skip that slide. Michael, I'll just need about 1 more minute to go over this, and then I think we can move on to any questions and then go on to the last part of the presentation. Does that sound good? Okay. All right. So when it comes to constructing gender-based violence aware investment portfolios, there are a couple main policies, processes that you can implement. There has been some research, in particular by the Criterion Institute. They have actually looked explicitly at what it would mean to incorporate gender-based violence explicitly into portfolio optimization. And some of the questions that need to be asked first are, where does gender-based violence exist? So one, it doesn't impact all investments similarly, so you have to understand the local variations. And then secondly, what makes gender-based violence an investment risk? Firm visibility, societal norms, geographic diversity of investor class, the reputational risks that exist for businesses that increase the frequency of gender-based violence, as the example on the previous slide where I was talking about building roads in rural areas being associated with more sexual assaults. Like that sort of visibility, that sort of reputational harm is not good for a business. There's also enterprise risk more comprehensively if you don't factor in gender-based violence. It touches upon not just reputational, but operational and regulatory concerns. There's also just the broader market risk. There's the cultural, political, and social factors related to gender-based violence and how they contribute to an investment's overall market risk profile. And then another key feature of this is that gender-based violence is not static. Especially in times of rapid economic development, there's a lot of disruption, and that can cause social backsliding, which can threaten future progress. And so you often see this in rapidly industrializing regions where on social metrics, they tend to backslide a bit, where you see there's an increase in gender-based violence, you see an increase in violence more generally as a consequence of the disruption, the dislocation, and the movement of people. And then there's also sort of tipping points, these sort of critical mass of a combination of social, economic, geographic features that can push a huge shift in the tolerance of gender-based violence, either favorably or unfavorably. And by measuring this and then reflecting this into in investment portfolios, you can help construct a portfolio that has a gender-based violence perspective. And with that, I will turn it back to Michael and Barbara for the last bit of this presentation.
Excellent, Josh. This is really fascinating to me, and I know that we haven't seen this kind of work anywhere. And the role of the actuary seems particularly critical here. Mm-hmm. And I remember when you started out with this work, one of the big issues was data. Yeah. And certainly that's a realm where actuaries don't like to be, in a place where there's no data or they perceive no data.
Right.
How have you addressed that? Because I mean, I love your many faces of gender-based violence, but I keep thinking, where do you get information for that? So
yeah, it's very, very difficult. This is one of those situations where you either have to build up your own measure of gender-based violence by incorporating the data that is there and cleaning it so that you can get it on as consistent a basis as possible, and then create sort of a scoring system that isn't necessarily a ordinal, or rather, sorry, a cardinal like variable, one that's more ordinal, right? So you look at countries relative to one another without saying like there's an absolute value that reflects like gender-based violence per se in that region. You could just look at countries and relatively speaking say that this country is performing broadly speaking better than another country and assign it a rating. So a lot of it is being able to build the structures that you can position that data and sort of transform it effectively and operationalize it into a variable that has broad applicability. And then there's also augmenting using non-traditional data sources, right? So this is where you can use machine learning algorithms, you can make use of a lot of nonlinear models to calibrate. There's ways that you can also incorporate things such as like Twitter feeds, right? To get information about frequency of social views on things like gender-based violence. And so there's a lot of social media out there that provide APIs that you can then plug into any sort of statistical software like R. You can use Python as a programming language. You can take that data in, and then you can sort of mine it for information and use that to develop associations that help to clarify the relationship between economic factors, which are widely available. Like that's the easy stuff, right? Like getting data from the World Bank, getting data from many countries is usually fairly easy for broad macroeconomic measures. But then tying that back to this more ephemeral gender-based violence metric, using these tools, augmenting with machine learning algorithms, making use of social media data as much as possible, then you can get a score. And then at the end of the day, you may have to do a qualitative adjustment. So you're never going to get it completely away from it. But on the bright side, actuaries are good at trying to forecast the future when they know that future may not be the same as the past. And so there are a lot of tools out there. A lot of the work that's been going on with climate change is, I think, indicative of this, and how that's been incorporated into property casualty insurance gives you a really good roadmap for how you can do it with gender-based violence and other social measures or ESG more broadly.
Excellent. That's super, Josh, and I applaud the effort at trying to make this happen and to figure this out. I know it's been a bit of a challenge, and I love the objective of USAID and the INVEST program, where if we can quantify it, we can start to bring in the private sector. There's plenty of organizations out there that are NGOs and donor-funded groups that are trying to do this, which are important, certainly.
Right.
But if Absolutely. We can start to include the private sector because there's some quantification there, I think that's really a super important thing and really has great potential. And I think fundamentally this is at the feet of actuaries.
Yes, absolutely.
So excellent. Thank you, Josh. And now we've talked a bit about understanding the clients, understanding the market, and we want to talk with Barbara, and you know, well, back when we could travel, I was traveling with a colleague who had been an actuary for 40 years, and we were traveling in Ethiopia, looking at some of the work that we were doing. And one of the things he said at the end was, I've been an actuary for 40 years and I've never met an end client until this trip. And I think this is really, really important for us to understand, and for actuaries and others in insurance to really get out and understand these markets. And so when we do work on understanding gender or other things that we do, we always want to go out and understand the clients, and we work with teams of people that go and do this. And I think it's often among the most powerful pieces of data that we can get, and it's actually generally qualitative. But the qualitative piece helps you understand the why. Why do people do what they do? Why does this happen? Why do you use that response to risk management? And I think that piece is critically important, even when we live in a world that is often quantitatively based. The qualitative piece is important for you to understand and for you to get a vision of, and to really kind of understand that market, so that when you're developing products, you do that with that level of understanding. It's not just yes or no or 5 or 9. It's really humans that we're talking about here. And Barbara has done just a great job in Kenya, going out and with her team, getting data from people in 5 or 6 different areas in Kenya, and getting a real depth of information. And I know, when you're doing this around gender issues, these are sensitive questions. And if you want to get to a level that is of value, you have to be asking those sensitive questions. You have to do it in a sensitive way. And that's what Barbara's been doing. And she's got some really, really interesting experience and some really super results from the research that she's been doing in Kenya. So Barbara, I turn this over to you.
Thank you, Michael. Thank you for that great introduction to what I'd like to spend the next 12 to 15 minutes talking about, something that's very close to my heart. Even as we start off, may I please request Josh to give me control so that I can cast my screen kindly. But just to say that this topic is something that becomes more and more important in countries like mine, in Kenya, in Africa, where insurance still remains quite low, the penetration of insurance. And then we begin to ask ourselves why, and that's one of the questions that I want to begin to look at today. I don't think we have the answers yet, but through the work I've been doing over the last 7 years. Before 7 years, to be very honest, I had never met a real client. So, Michael, I can totally relate to the actuary that you met. I'd never really met a real client. I had met them on Excel spreadsheets. I knew what they looked like from a quant perspective, but I really did not understand the human face behind some of the statistics that we were crunching, some of the trends that we were seeing. So today I'd want to just talk about, and when Michael asked me to speak about this topic, I thought, what other way than to actually talk about stories, real stories of real women that we have interacted with over the last few years, but specifically focused on the project that we're currently doing to define the risk profiles of women in Kenya. So I hope everybody can see my screen. Yeah, great. So I think when we as actuaries think of data, we think of data arranged beautifully in Excel spreadsheets or any other software that you're using. Something that you can easily crunch, something that can tell you, we think of big data, we think of, can we calculate the averages? Can we figure out the standard deviations? And can we try and understand, can we try and predict what will happen? And I know that's a very important role of actuaries, and I think it's still remains, quantitative data still remains very, very key to everything that we do in insurance. But I think, to me, as much as we love quantitative data, it does have some limitations. And we've seen gaps in quantitative data analytics. There are many questions that remain unanswered. And a lot of times you'll find that because of quantitative data, insurance companies are designing products for groups of people and not really narrowing down to nuances, to personal experiences that can actually help us to really answer specific questions to specific individuals, where somebody actually feels that this product was developed for me. And some of the questions that are very difficult to answer through quantitative data is, for example, why did it happen in that particular way? What are the trade-offs of the customer that I want to serve? What decisions are they making on a day-to-day basis that I need to consider? What if this happens? What if their child got sick on that particular day? What would they do? What decisions would they make? Quantitative data doesn't tell us the dreams and aspirations of our clients, and I think for me this is so important. What are the dreams and aspirations of our clients, and how can we help them to make it a reality through the products that we design, or through the solutions that we design? And what do our clients worry about? You can't get that from quantitative data. And another important piece is, what else do people do for a living? I don't know how it is in Asia, but in Kenya, people do so many different things to just make ends meet. We call it, a side hustle. So if a woman, for example, is a teacher and the data shows that she's a teacher, how will you then know that she actually has a small kiosk next to her home where she sells vegetables? Or how will you know that she actually has a cow that she milks every day and sells milk to her neighbors and has an alternative source of income? So some information like that can only come through actual conversation, real conversations. And how I want to share the importance and the power of qualitative data is through stories. So I'm going to share 3 stories of women that we've interacted with over the last few months and actually years as well, to also show what does it mean to begin to analyze qualitative data, and what does it mean. So qualitative data adds a lot of color. It adds depth, it adds insights, dimension. It actually brings a human face to the data that the data that we saw initially. It gives it a human face. It gives it a voice to then begin to answer gaps that were left by quantitative data. I think insurance companies, with the advent of big data, very powerful data analytics tools, most insurance companies are focusing on quantitative data. But I really want to just bring forward the case that there is so much to be gained from qualitative data, and that qualitative data actually complements the quantitative data that is, I would say, almost easily available. So when I'm talking about stories, I want to talk about, the first story is on the line of decision-making power in the home. And the first story I want to talk about is family planning, as an example. So in most rural homes in Kenya and across actually Africa, most poor rural homes have so many children. And this is because men will not allow family planning methodologies to be used because it is seen as taboo and as shameful. So women continue to give birth throughout their reproductive age, leading to very poor economic progress. I think it is known that, when mothers as giving birth for 20 years, really in terms of economic progress, in terms of career development, and in terms of finances, they're really left behind. And then this leads me to the second point of, again, decision-making power in the home, and this is about finances of the family. So you have a very progressive woman who is empowered. She's working in the informal sector as a primary breadwinner, but at the end of every month, she's forced to surrender her earnings to her husband, who then makes decisions on how the money will be spent, leading to disempowerment and inability for this woman to grow the business, her micro enterprise. Such a woman, obviously, as much as she is making an income, so on paper, on the data, quantitative data will show us that she's making an income, and therefore we will want to design products for her. Yet what the data will not tell us is that as much as she's the one making that money, she's not the one with the making the decision on how the money will be spent. The next story I want to talk about is about Joanne, who is a 55-year-old micro-entrepreneur. She lives in Kibera. Kibera is the largest urban slum in sub-Saharan Africa. It's here in Nairobi. Joanne is married. She has 6 children, and she's been hosting several family members from the village who have come to Nairobi and crammed into her one-room temporary housing. Being a micro-entrepreneur and a breadwinner, she spends a lot of her time away from home in her business. And during one of these times when she's away, very unfortunately, her daughter was raped by one of the male relatives who was staying with her, and she gets pregnant. Unfortunately, Joanne cannot really help her daughter because, first of all, the cost of maternal care, but secondly, the shame of incest just worsens the situation. Her husband wants to leave her because he also cannot bear the shame. And this daughter carries the pregnancy to term and as a family secret. Teenage pregnancies, especially in low-income households, has serious repercussions at the family. The family is looked upon, they're shunned by the community, they're looked down upon. And then, of course, this child also does not get access, this teenager does not get access to healthcare for early screening of complications, and could lead to death or during childbirth of either the mother or the baby. Now, the high healthcare costs that could come from this then leave this Joanne, in this vicious cycle of poverty, because at the end of the day, she's the one who will still have to take care of her daughter, take care of that grandchild who is born all alone because she's looked down upon by society, by her husband. And these are stories that you will never, ever hear from an Excel spreadsheet or from quantitative data. The next story is about Evelyn. And Evelyn is a young woman, 24 years old, and she's moved to Nairobi. She came from the village, to Nairobi, the capital city of Kenya, in search of a better life. She's got very minimal education, so she's working in the informal sector. And what she does is that she cleans clothes, and she cleans homes and washes people's clothes for a daily wage. So she goes out and just finds homes where she can offer her service for that particular day, and then she's paid. Now, one of the biggest challenges we've seen from the data and from the interviews and the conversations we've held with women, especially in Nairobi, where this is a major occupation actually for women living in urban areas, is that they face sexual harassment from mostly the man of the home where they have gone to clean, who would then possibly be the one paying her, asking for sexual favors in exchange for the money that she has actually earned. because Evelyn is not aware, first of all, of the kind of laws that could protect her. She's not aware of the financial tools that she could use in this, urban settlement, because she has come from the village. And because of the embarrassment and lack of, access to healthcare, she remains in this. Sometimes she'll work and not get paid her money. She's always being harassed. And the dream of a better life in Nairobi remains a pipe dream. And she's not able to improve her standard of living. And she has younger siblings who rely on her, so going back to the village is really not an option. And the last story I want to share, and is something that's a project that's very close to my heart, and I think it's something that Michael spoke about in my introduction. So Wakesho is a woman, she's a Taita woman. She lives in the Tsavo ecosystem. Tsavo is probably the ecosystem with the most elephants, one of the largest populations of elephants in the world, and it's right here in Kenya. Attracts probably the most number of tourists who come to enjoy our wildlife. Now, there's the beautiful side of wildlife that we all love and we want to enjoy and to see. But there's also the ugly side of this beautiful elephant, and this is a photo that we took on one of our trips going to the communities that are living with wildlife. And in this last season, Wakesho took a loan to grow 2 acres of maize, and she was looking at it as a business venture where she would sell her 2 acres. She had a fantastic harvest, and she puts the harvest in a newly expanded granary. And unfortunately, and this is a story we had across from both men and women, and it's even worse for women-led households, and I'll explain why. The night before she sold her maize, a herd of elephants broke into her compound and dismantled her granary to get access to her maize. Wakesho is now left with a broken granary, lost harvest, and a loan that she still must repay. There's obviously also the persistent fear for her life. Now, when I said it's worse for women-led households, is because one of the things that some of these communities do is that the men actually spend a lot of, during harvest time, they actually go out there because of their sheer strength, and they actually are outside guarding their granaries or their farms, which obviously as a single mother with small children will not be able to do. So the question I ask is, what can insurance do? So some of the opportunities I've seen, and I think for actuaries in looking at qualitative data, there are several, and I just want to bring out these 4 based on the stories that I've shared. And I think even as we begin to dig into the data more, we will see more and more the kind of unique solutions we can develop for women. One of the things for actuaries, I know actuaries love hard numbers, but I think we need to begin looking at stories to humanize, to remind all stakeholders that there are real people, real faces of women and men behind all the revenue that is collected by insurance companies. So I really urge actuaries to look into stories because I think actuaries are at the unique position where they really understand the quantitative data. So if you can begin to look into stories so that you can create that connection with the qualitative data, and sometimes saying that the solution may not just be an insurance product, it may require the insurance companies to also form partnerships, strategic partnerships, to provide the solution to this particular, woman or even men. It could be something around sexual health care, it could be family planning, mental health, but really to begin looking at stories and humanize it, and just bring that out. The other important aspect is information and education. So, if actuaries looking at the data and the trends that you see, connecting it to the qualitative data, being able to empower women with education around financial tools that are available to them, because it's not just about hard selling of insurance. It's also about just providing your potential end clients with information. I think one of the most important things for me when it comes to looking at qualitative data is to also understand your clients' worries, their dreams, their aspirations, and then being able to align your solutions and messaging. How do you create your messaging that can help your clients achieve their goals, their dreams, their aspirations? They all, even when we're looking, I work in the inclusive insurance, but even the poorest person in society has a dream, has an aspiration, and I think if we can do something with our products to help them achieve, I think we'll have left our mark in this world. And the last aspect is talking about human-centered design, which I know Prapti has already talked about. So how do we bring the woman into the center of our design process, which I don't think you can really do with quantitative data alone. You need to understand this person as a human, to map out their journeys, to be able to begin creating products. And I think also saying there could be new risks that we've never thought of before, such as a human wildlife conflict insurance program. So allowing ourselves to get uncomfortable and possibly even looking into risks that are not previously insurable. And I think, again, actuaries have a unique advantage here because you have the capacity to look at data in a very unique way. And I think that I wanted to share with the audience an African proverb that says, if you educate a man, you educate an individual. But if you educate a woman, you actually educate a nation. And I think I'll leave it at that, but I think this is very important as we're thinking about designing products specifically for women. Thank you, Michael.
Oh, Barbara, thank you. That was excellent. And for me, you very clearly made the case for including qualitative information and qualitative understanding of these stories with the quantitative. The quantitative, after listening to you, the quantitative is woefully not enough.
Yeah.
Woefully deficient. You need
Absolutely.
that qualitative stuff. And as I was listening to you, I was thinking that, also it becomes really impossible to be very clever and to be very innovative in insurance without understanding the qualitative piece. So the pieces really need to come together if we're going to be able to take advantage of the $1.7 trillion market that Prapti was mentioning, for example.
Absolutely.
Let me just ask you, Barbara, you said that even for you, after 7 years, you hadn't met a client either. Now you've been out and you've met a client as an actuary, an active actuary. How has your process changed since you met clients and since you understand and develop these stories? How does that change you in a way that might be an example for the actuaries in the audience?
Yeah, Michael, thank you for that question, because I remember the first project I did where I actually had to go and meet clients, and it was in an urban slum in Nairobi, and it had really poor drainage. I remember sitting in a room and thinking, I hope I don't throw up in front of all these amazing people who are sharing their stories with us, because I felt so sick. And I remember thinking, previously when I worked actually at one of the largest insurance companies at the time in Kenya, in the Actuary Role team. And I remember we would receive data and you just crunch, and you don't even think for a second, who am I designing this product for? And I remember sitting in that room and thinking, my goodness, I have sat and imagined what the needs of this, people are, designed products. They've gone out into the market. Sometimes they have failed and sometimes they've been successful. But I think I felt it was such a disservice. And so I think over the last 7 years, actually interacting with the real people, farmers, men and women, micro entrepreneurs, and just realizing how hardworking, understanding the journeys that they go through, and just realizing that I'm not going to design one product that's going to fit, all the smallholder farmers in Kenya, for example. I think for me it has changed. It has. Whenever I think of a product, I think of the person first before I think of the data. And I think also for the team that I work with, being able to, as an actuary, understanding that even as I'm hearing this story, being able to say we need to ask this question in a slightly different way because I'm connecting that to the quantitative data, which no one else maybe in the team will be able to. And I think it is so important for actuaries to go out. I think you know the story of Pioneer in the Philippines, where everybody goes out into the field. So I don't think it should just be actuaries. I think it should actually be everybody, just to know who are these people that you're designing products for.
Yep, management at Pioneer Insurance in the Philippines. They make all their staff go out and do field visits and stay with clients and really understand their clients. Barbara, this is critically important, and I completely agree with you to get actuaries out there. If you don't have a boss that says, okay, actuary, you need to go and spend a night with such and such in some village and talk to them about their issues and learn their stories, what should actuaries do to get that understanding, to get that field experience? Can they get up from their desks and go into Gikomba market and just talk to people?
I think so, because I think actuaries are very, you see, whenever anyone's designing a product, it'll always end up with the actuary. The buck stops with them when it comes to how the product is designed, how the pricing is done. So I think it also has to be an individual, a personal initiative to actually say to the marketing, to the research teams, that when you're going out to the field, please tag me along. Okay, I feel it just has to be a personal initiative, and just say, please tag me along when you're going out next. And one of the things I've also found is to design very simple actuarial models that you can even go out into the field with and even begin to do some very, very high level pricing as you're listening to the conversations happening. So that even as because one of the important aspects is to balance between the willingness to pay and the ability to pay. So being able to sit in the field and say, okay, you want a product that pays you this much per night. At a very high level, would you be able to pay this much, as an example? And I think that goes then to the active role of actuaries in actually designing prototypes, and not just waiting until the very end to then receive all the data and crunch the numbers. So I think, Michael, for me, it's really boils down to, of course, it's great for insurance companies to come up with key performance indicators that maybe say that actuaries or anybody must go out into the field. But I think also it should be a very personal initiative to say, I'm not going to design a product for somebody that I don't know. I must meet them and create something that makes sense to them. Because you see, when you're pricing, you may come up with a price that makes sense for your statistics, but maybe that statistic does not make sense to the person who is actually having to make 1,000 other decisions and trade-offs to be able to access your product.
Exactly. Barbara, I'm sure that if we were in person, everyone would be standing up and clapping for you.
Thank you, Michael.
We just have a couple moments, and I want to say, we've looked at data or sex disaggregated data. We've looked at gender-based violence and quantifying that. We've looked at the qualitative side that's so important to integrate with the quantitative activities of actuaries. I hope that what we've done is we've shown you as actuaries a new way to look at things. We have tremendous opportunity right now to make changes, to innovate in insurance, not just in the distribution channels, but those help us with new technology and such, help us to get out to the market. But technology is not an excuse for not understanding your client and not knowing your client. So we need to be thinking about these big questions. How can actuaries reduce gender-based violence? And I think we've given you a good example of how at least that process has started, and you can do that. How do we get the data that we need? Disaggregating the data, working with institutions like Prapti was talking about, where we work with institutions to help them build up to a real product, a real intervention that that helps women. And we have to recognize that women have significant needs that are different, maybe within the broad structure of traditional products, but specifically different based on the risks that they face. We have to understand the clients, we have to understand the numbers, we have to create a structure to do that, and we have to recognize the power that we have as actuaries to create change. Our job is not just to sit behind a desk in an office and look at spreadsheets, right? Hope that that's been very clear to all of you today, that that you need to get up, you need to get out, you need to see new things, you need to see people, you need to find new ways of gathering the data and understanding the data, and you need to be working in ways in which you actually help to transfer knowledge. This helps us, helps all of us to take advantage of the opportunities of innovation now and to do this in a right way. So I hope that you've all gotten some good wisdom from this. We are just a bit over. I'd like to offer an opportunity for 30 seconds for Prapti and Josh, and Barbara, you can have the last word. But if we could take 30 seconds and just the biggest, most important thing that that actuaries, casualty actuaries should be doing to make sure that they can have a bigger impact in terms of gender and gender insurance. So actually, maybe Barbara, we do it the other way around while Josh and Prapti get on, because you're here with us already. One big thing, 30 seconds.
Michael, at the fear of repeating myself, I think I just want to emphasize actuaries, roll up your sleeves, go out into the market, meet your clients, and know them in an intimate way, because you're the only one who can possibly connect the quantitative data to the face of the person, and be the advocate in your companies to remind your boards and CEOs and everybody that they are real people and you know, real women behind the revenues that you collect and the statistics that you're presenting. Thank you.
Thank you, Barbara. Prapti?
Thanks, Michael. What I would say is, from our experience, what we think is keeping an open mind. That is very certainly very important, and especially being at the role as actuaries, right? The whole organization depends on you to price and for the company to be successful in launching that product. So unless there is an open mind and a willingness to embrace the change, the whole it's the financial inclusion for women, it becomes hard. So I would say, yeah, please keep an open mind. Thank you.
Yeah, thank you, Prapti. Open mind. It's hard, but it's worth it. It's worth it. Josh, last word.
Yeah, I would just say that never underestimate the power of insurance to drive change. Just because it hasn't been done in the past doesn't mean that there isn't a way to do it in the future. I think, you know, Prapti and Barbara really hit the nail on the head. You know, keep an open mind, use data, like all of that's possible, and never forget how you can drive positive outcomes if you design products the right way.
Yep, perfect, perfect. Barbara, Josh, Prapti, thank you so much. And I know that everyone would be standing and clapping for you because there's been so much wisdom shared here. Really, thank you so much, and I greatly appreciate your and I greatly appreciate your inputs. Just looking for my script now. Yeah, I think, oops, now I'm failing on the last step. So this will be available in a couple days, I think, from CAS, and you should make sure to fill out your survey forms. So everybody should take a look at the survey forms, and you know what to say. So thank you all very much. And again, Barbara, Prapti, Josh, thank you. This was great. Bye-bye.
Bye.